There is one artificial intelligence stock that stands out with the potential to turn a steady monthly investment into a surprisingly large sum over time. Palantir Technologies has rapidly positioned itself as one of the most influential enterprise artificial intelligence companies in the world. As organizations move beyond simply testing artificial intelligence and begin integrating it into real-world operations, demand for the company's artificial intelligence platform continues to accelerate. This shift is not just theoretical, it is actively reshaping how both government institutions and commercial enterprises operate, and Palantir is right at the center of that transformation. As adoption expands, the financial impact is becoming increasingly visible. Analysts are forecasting that the company's non-generally accepted accounting principles earnings per share could rise significantly from $1.32 in the year 2026 to approximately $6.25 by the year 2030. That kind of earnings expansion signals not just growth, but a company that is scaling its technology across multiple sectors with increasing efficiency. While the stock currently trades at 77.3 times forward earnings, which may appear expensive at first glance, there is an expectation that this valuation will gradually adjust over time. More specifically, analysts believe the forward price-to-earnings ratio could average around 54.4 times over the next 5 years. When combining both earnings growth and valuation normalization, the long-term outlook becomes even more compelling. If these assumptions prove accurate, the stock could reach a value of approximately $340 per share within 5 years. This would represent more than 2.3 times its recent closing price as of March 27th. In terms of annual performance, that translates into an approximate compounded annual growth rate of 18.9%. This level of growth highlights the potential power of investing in companies that are deeply embedded in transformative technological trends like artificial intelligence. Now let's break down what this could mean for an investor using a disciplined and consistent strategy. Investing $100 every month into Palantir over a 5-year period would result in a total contribution of $6,000. One of the key advantages available to modern investors is the ability to purchase fractional shares. This means that even if a stock's price increases significantly, investors can continue allocating the same dollar amount without needing to buy full shares. This allows for consistency, which is one of the most important factors in long-term investing success. Although each monthly investment compounds for a different length of time, the overall effect can be better understood by grouping contributions on a yearly basis. This simplifies the calculation while still demonstrating the broader impact of compounding. Earlier investments naturally benefit from having more time in the market, which allows them to grow at a faster rate compared to later contributions. Using an estimated annual return of 18.9%, the compounding effect becomes extremely powerful over time. The first $1,200 invested grows to approximately $2,851 after 5 years. This represents more than double the initial contribution, driven purely by the effects of compounding growth. The second year's investment increases to about $2,398, showing slightly less growth due to a shorter compounding period. The third year's contribution reaches around $2,017, followed by approximately $1,696 for the fourth year. Finally, the fifth year's investment grows to about $1,427. When all of these contributions are combined, the total portfolio value reaches approximately $10,389 after 5 years. Out of this total, $6,000 comes from the original investments, while roughly $4,389 is generated through gains. This clearly demonstrates how consistent investing, combined with a strong growth rate, can significantly amplify returns over time. It is important to understand that these figures are based on a steady annual return assumption, which simplifies the reality of market behavior. In practice, stock prices fluctuate due to a wide range of factors including market sentiment, macroeconomic conditions, and company-specific developments. However, by smoothing out these variations, the example provides a clear illustration of how powerful long-term investing can be when combined with patience and consistency. Taking a broader perspective, the rise of artificial intelligence represents one of the most significant technological shifts of this generation. Companies that are able to successfully deploy artificial intelligence at scale are likely to capture substantial value over time. Palantir's focus on integrating artificial intelligence into mission-critical operations gives it a unique position within this rapidly evolving landscape. Its ability to serve both government and commercial clients further strengthens its growth potential, as it is not reliant on a single market segment. Furthermore, as artificial intelligence continues to evolve, the demand for platforms that can manage, analyze, and operationalize data is expected to increase. Palantir's solutions are designed to do exactly that, enabling organizations to make faster and more informed decisions. This creates a strong foundation for continued expansion, especially as more industries begin to adopt artificial intelligence-driven strategies. For investors, the key takeaway is not just the potential return, but the strategy used to achieve it. Consistently investing a fixed amount over time removes the need to perfectly time the market. Instead of trying to predict short-term price movements, investors can focus on long-term growth and allow compounding to do the heavy lifting. This approach reduces emotional decision-making and encourages discipline, which are both critical components of successful investing. In conclusion, allocating even a modest amount like $100 per month into a high-growth artificial intelligence company has the potential to generate meaningful returns over time. While there are no guarantees in the stock market, the combination of strong earnings growth, increasing adoption of artificial intelligence, and the power of compounding creates a compelling case for long-term investors. Those who remain consistent and patient may find themselves well-positioned to benefit from one of the most transformative trends in modern technology. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.